Good morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is Thursday, April 12th, and I want to welcome you to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. Hey, you can also find me, of course, on Facebook, LinkedIn, Twitter, Truth Social, TikTok, and all those other crazy social media sites by searching Larry Steinhouse. I'm also on Rumble, too, if you want to take a look at that. Hey, also just a reminder, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can comment live on the show. You can comment live during the show, that is, on YouTube, Facebook, LinkedIn, and Twitter. And please say hi so I know you're watching. Hey, real quick, I want to say hello to a couple of people online. Hey, Mick and Larry Feldman, awesome, man. And James and Ken, thanks so much. I totally appreciate you guys watching. As always, Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, so on today's show, we're going to be discussing, of course, the futures update. We're going to be talking about housing sentiment. We're going to be talking about Disney's tax break, no more, ha ha ha. And we're going to be talking about Elon Musk inflation report and Amazon's delivery service. It's an interesting day, kind of mixed up. All right, so let's talk about what happened yesterday. It's always a head scratcher when the market is up over 300 points, but all my plays are down. Of course, the big story is that Netflix tanked, and I mean tanked. This was actually worse than the Facebook drop in January. This is horrible. The stock got killed when the earnings came in below estimates, and then the guidance stated that they were going to be losing subscribers for the first time in 10 years. Netflix who? Well, this crash crashed other tech stocks like Facebook. The fear that Facebook will repeat the earnings debacle they had in January is on everyone's mind right now. I have a few options on the stock, and I'm worried that they might actually go bad. Disney was also down along with Netflix. However, I actually think this is temporary. Disney is not a streaming company. It is a company with a streaming service, so it's very, very different than Netflix. I believe Disney's going to bounce out of this drop quickly. Netflix, by the way, also had 10 downgrades from several institutional trading companies. 10! Holy moly, that's a lot! And I got to tell you, I don't think Netflix is a bargain yet. I still think they're going to see some more pain for the rest of the year. I would stay out of it. I don't think it's a good play at all. It's just going to be bad. All right, M&T Bank also announced their earnings, and they crushed it. The stock was up 13 points at one moment yesterday. It seemed that the bank stocks are keeping the momentum in Wall Street going. So that's a good sign. That actually might be a good sign for the tech stocks, the rest of the tech stocks, because if you think about it, right, the tech stocks all crashed in January, and now they're all doing well, but the bank stocks also didn't do so well in January either, so that might be a good sign for what's to come. IBM was another one that did well. By the way, I feel like a shift is coming, and we should take notice. The old brands are making a comeback, like IBM. They make a comeback, and it means it's kind of time for shifting strategies. I'm going to tell you right now, look for good dividend-paying stocks with PE multiples of normal numbers like 7 to 20. And honestly, 20 might even be high in this new market. By the way, if you don't understand what a PE multiple is, get your butt to Investor Schooling and learn. This is really important stuff if you're going to be in the stock market or in stock options. Today, we also have Snap on deck for earnings. Snap. What's that? I don't know. This was a stock that I couldn't figure out how it ever got past 20. But it hit a high of 83, and it was higher than Twitter at one point. It was insanity. I can't even imagine this company continuing in this range for much longer. And speaking of PE, it has a PE of 62, and Twitter has a PE of 56. And at least Twitter has people who know what it is, especially Elon Musk. Can you imagine if Elon Musk wanted to buy Snap? Would his reason be that, he didn't like the pink princess pony over the purple princess pony picture that kids send each other? I don't know. Anyway, United Airlines also posted earnings after the bell, and once again, the airlines are showing a great comeback. American Airlines posted their earnings this morning, and they kicked butt. I mean, it's actually pretty good. You guys know I made a really nice profit. I made 60 grand profit on that. But honestly, if I would have kept that till now, just till opening today, I would have been up over $200,000. It would have been an incredible play. But, nobody ever went broke taking a profit. Anyway, the futures are on fire this morning, and I see a chance for the tech stocks to rebound. Hey, let's take a quick look at the numbers. Right now, the Dow is up 250 points. The S&P is up 39, and the Nasdaq is up 177. That's pretty good, because if the Nasdaq's up 177, that means that it's going to recover from the Netflix problem yesterday. By the way, I just want to take a minute to thank a bunch of people who came out last night to the Temperance House in Newtown. I'm going to mention Harris and Larry and Joe and Carrie and Peter and Sam and so many other people. And of course, the congressional challenger Alex Enton was also there with so many others. And it was a lot of fun. Bill Spadia, of course, from New Jersey 101.5 was there. And we all chatted the night away. It was a lot of fun. Some of us also drank too. Shh, don't tell anybody. Anyway, thanks for making it a great night. I'm looking forward to seeing most of you there on Sunday at our Freedom and Finances event in the Washington Crossing Inn. And by the way, I got to tell you, if you haven't already bought your ticket, there might not be any left. Take a quick look. Honestly, we're either sold out or really near sold out. But if you want to check it out, go to 4mmw.com, 4mmw.com, and see if you can still get a ticket. I'm really looking forward to some of the speakers like Doug Mastriano, Teddy Daniels, Bill Spadia, Dan Satofsky, Ken MacArthur, Gordon Burdecki, Anna Kelly, and Phil Falcone. I'm hoping you guys are going to be there this Sunday for the event. It's going to be a lot of fun. You're definitely going to have some fun. Hey, real quick, I want to say hello to a couple of people who joined us online. Hey, Tommy and Colin and Charles, Signal Man. That's Jeff, right? Yeah, of course. And of course, my lovely wife. My wife is my biggest fan. I love it. All right, let's talk about the housing market. I've been saying this on both of my shows and in my classes. I've been saying that it will be the last good housing market of this cycle of the economy. We had the best housing market of this current cycle last year, but this year it's going to begin to shift. Have you ever been on like the pendulum type rides down the shore, or like an amusement park? Those rides where they swing you from side to side. Some of them look like boats even. Well, if you've been on those rides, let me use that ride as an analogy of where we are right now. When you reach the top of one side of the pendulum, there's a moment of non-movement right before the ride swings you to the other side. It's kind of like a frozen moment in time that lasts a fraction of a second, but you're fully aware of that feeling you're about to shift and head down. That is exactly where we are right now. The housing market is about to shift. Check out the recent report. March sales were up 4.5%. I'm sorry, they were 4.5% lower than the same period in 2021. The median price of an existing home sold in March was $375,300, which, by the way, was an increase of 15% from March 2021, which was also the highest median price ever recorded. So the average house right now is $375,000. And now, check this out. At the end of March, there were 950,000 homes for sale, which was a decrease of 9.5% year over year. At the current sales pace, that represents what's called a 2-month supply. The 2-month supply concept simply means that if no new houses go on the market, it would take an average of 2 months to sell everything listed on the MLS. For some contrast, anything over 4 months is really, really scary, and when we hit the height of the recession in 2011 and 12, some parts of the country were even over 6 months. So here's what I believe is going to happen in the spring. Everyone's going to realize that interest rates are rising. If you didn't listen to my report yesterday, the average 30-year fixed rate is now over 6% and approaching 7%. That means the average buyer will have a tougher time affording or qualifying for a mortgage. And look, and by the way, this is being designed by the Federal Reserve. This is how they control inflation. In my opinion, this is really how you start a recession, and it's absolutely common. However, with the interest rates rising, many sellers are going to get panicky and want to sell their houses now. I predict the supply increase to be over 3 months supply by the end of May. And this is going to be the beginning of the drop of the pendulum, and it's going to happen fast. You're also going to see a phenomenon that realtors are not going to understand. You'll have houses that will still have bidding wars, but you will also have houses that are sitting on the market and no one will be able to explain why. They could even be the identical house in the identical neighborhood. By the way, builder confidence also fell in the market. New single-family houses fell 2 points. Builder confidence fell 2 points to 77% in April. And this was according to the National Association of Home Builders Wells Fargo Housing Market Index. Any reading above 50 is considered positive sentiment. That means we're far from that number. However, the reading marks the fourth straight month of declines for the index, which was 83 in April 21. So it's probably a really good time to tell you about my new book called Money Hacks. When the economy changes, the information in this book is going to change your life forever. You're going to be more secure, you're going to make more money, and you're going to pay less taxes when you apply what's in this book to your life. The book is called Money Hacks. Take out your calendar and save the date of June 1st. Everybody take out your calendar right now. Mark June 1st. I'm going to be having a special dinner and a book launch in the evening at the Sheraton Hotel in Oxford Valley. And the details are going to be announced this weekend, actually at the Freedom of Finances event. So save the date. Save the date. The book is called Money Hacks by Larry Steinhouse, and save the date of June 1st. We're going to take a quick break here, and we'll get back to you on the other side.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start. Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And if you're watching online, please hit that share button so you can help your friends learn about how to make more money. Hit that like button. Let me know you enjoy the show. And also leave comments on Facebook, Twitter, LinkedIn, and YouTube, and I'll try to respond to them. Hey, a couple of people have joined us. Thanks, Lewis. Thanks, Peter. And thanks, Michael. Totally awesome. Thanks so much for watching. I appreciate you guys. Now, come on. Hit that like button. Hit that share button. All right, so far we've been discussing the futures update, and right now the Dow is up 255 points, the S&P is up 40, and the NASDAQ is up 177. That's pretty good. We talked about housing sentiment, and I'm telling you, the market's coming. It's going to crash. It's going to crash, but it's going to be a great time to buy if you learn how to buy houses the right way. And I'm going to tell you, come see me. I'll teach you how to do that. All right, we're going to be coming up. We're going to be talking about the Disney tax break. We're going to be talking about the Disney no longer tax break, I should say. We're going to be talking about Elon Musk's inflation report, Amazon delivery service, and, of course, today's picks and plays. But first, come on, guys, hit that like button, hit that share button. Don't forget to leave comments on Facebook, LinkedIn, YouTube, and Twitter. And if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day at 7:30. Also, look up Money Chat Now on Facebook when you get home, and let me know what you think of the show. All right, real quick, let's go into the next topic real quick. Hey, don't forget to order my book, too. You can still order the book. I know we talked about it. You can still order it as well. But I also want to make sure that you guys know you can go to barnesandnoble.com and order Money Hacks by Larry Steinhouse. All right, here we go. Let's get into what's going on in Disney. I love it, right? All right, so if you've heard the expression, go woke, go broke, and I'm sure you'll chuckle in revenge each time you hear a story of a company being financially punished for going woke. Sometimes that punishment is a drop in the stock price. Other times it's a change in the management. And look, honestly, I got to be honest, it usually isn't a permanent thing and everyone forgets anyway. Well, Disney World, a division of Disney, just got a wake-up call from Florida because it went woke. We have heard in the news about how Disney was playing political games with the parental rights bill in Florida. You know, the one that's nicknamed the Don't Say Gay bill by the most ignorant people on the planet, the liberals, and most of them work for Disney. The bill, as you know, is all about restricting teachers from teaching about gender assignment and gender identity to children who are in kindergarten to third grade. You know, basically let kids be kids and worry about digging up frogs in the backyard instead of wondering if they should chop off their private parts. Well, Disney pushed back on DeSantis' bill, and DeSantis basically said, "Who the hell are you?" And the answer was, "We're a separate entity from Florida. We're Disney." So the land that Disney sits on is considered a special district. This was created in 1967, and it's known as the Reedy Creek Improvement District. The concept and agreement exempts Disney from a host of regulations, certain taxes, and fees. It has allowed the entertainment company to manage its theme park and resorts in the state with little red tape for more than 50 years. Well, all of that's about to come to an end. Under a bill passed yesterday by the Senate, any special district established prior to the ratification of the Florida Constitution in 1968 and not renewed since then would be dissolved on June 1st, 2023. By the way, they can seek to reestablish a special district under its dissolution, but do you really think they're going to get it? Reedy Creek, which is a permanent population of about 50 people, which is interesting, as well as has its own board of supervisors and fire department, it allows Disney to construct new buildings and expand its parks without having to adhere to state or county regulations related to construction, wastewater management, and drainage. So basically, they write their own ticket. Now, I'm sure they're doing it safely, but that's very interesting, isn't it? It encompasses 4 theme parks, 2 water parks, a sports complex, hotels, stores, and restaurants. Well, now the woke just got a wake-up call. I think we should nickname this new bill the Don't Say Gay bill. Let me repeat that. The Don't Say Gay bill. I just wanted to see if I could repeat it. All right, let's get into the next topic right here. Let's talk about my favorite guy, Elon Musk. So I'm really beginning to believe that Elon Musk is definitely from another planet. You know, he has to be an alien. No one could be this smart and this well-versed in so many different things. In fact, I actually think he's inventing all these companies so we could build a rocket ship to take him back to his planet. So anyway, on the earnings conference call for Tesla, Elon Musk had some interesting things to say about inflation. As you know, the U.S. inflation rate rose about 8.5% annually in March to hit a 40-year high. Look, some people blame Russia, some people blame the scamdemic, other people blame the miserable excuse we have for a president. And I got to be honest, for me, I basically blame the Fed for not raising interest rates 6 years ago. But that's water under the bridge, as the saying goes. Back to Elon Musk. In his conference call, he stated that inflation is much higher than being reported. Musk said, "I think the official numbers actually understate the true magnitude of inflation, and inflation appears to be likely to continue for at least the remainder of this year." Musk continued with, "In some cases, Tesla suppliers are requesting 20 to 30% cost increases for parts over 2020 from 2021 to 2022. I got to tell you, I agree with Musk. We know that used cars are now up 45%. We know that gas is up almost double. Housing has increased about 17%, and groceries are up about 8 or 9% and expected to go higher. So how can the number be only 8% increase? It's weird, right? So this conversation with Musk came up when he was discussing the fact that he has to raise the cost of Tesla cars because the cost of materials are increasing. He also mentioned supply chain issues as well. Well, I got to tell you, about this time next year, I expect to be having a very different report on the economy, and I'm really curious to know what Musk is going to say. Anyway, we'll see. The economy is going to have a little bit of an issue. All right, let's talk a little bit about Amazon and what's going on. Hey, do you remember the commercial for FedEx, the one where they used to say, when it absolutely has to be there overnight, call FedEx? It was definitely a game changer for the small package industry. FedEx grew into the largest shipper of goods across the country, but now the largest retailer may be encroaching on their territory. Amazon launched a new service called Buy with Prime. This service lets third-party merchants use Amazon's vast shipping and logistics networks to fulfill orders on their own sites while also appealing to Amazon's 200 million plus Prime customers. So now any retailer can use the Prime delivery service instead of shipping with FedEx or UPS or even the US Post Office. You're soon going to see retailers using a logo in their website that says Ship with Prime, and the Amazon fleet will be delivering your package quickly. This is basically slated to roll out slowly, and I gotta tell you, like in the past, Amazon is simply using systems designed for their internal use to be used by others. This is similar to the Amazon Web Services product. Amazon, if you don't know, they needed an Amazon-sized data center, and they created one so big that they've been leasing the services to millions and billions or millions of small and big businesses at a great profit. This is just another revenue source that will help move the company and the stock forward. I like Amazon stock right now as we head into the 20-for-1 split this summer. I think it's a great play. I still want to know if Bezos knew that this company was going to be such a behemoth when he named the company Amazon. And I got to tell you, Amazon kind of reminds me of me. Yeah, me. Not because I need to lose weight, stop that. Man, really? But because I'm expanding my show. That's right. So listen to this, guys. Something you want to hear. As of next month, we will be adding a new segment to our show. It'll be a podcast interview segment. I'll be interviewing interesting people discussing their products, services, or just about anything that the audience might find interesting. The show is going to be expanded only on the online portion. It's not going to be on the radio, but it'll be on the online portion on Tuesdays. I'm kind of hoping you guys are going to enjoy the interviews. We have some people lined up, so you'll enjoy that as well. And if you want to be interviewed, please go to thelarrysteinhouseshow.com/guest. thelarrysteinhouseshow.com/guest to apply. There's no cost, and as long as you have something important to talk about, I'll have fun interviewing you. All right, let's take a quick commercial. We're running out of time.
Investor schooling. Those guys are everywhere.
Investor schooling? Those guys are everywhere.
Investor schooling?
Those guys are everywhere.
Investor Schooling. Those guys are everywhere. Register for a free class at investorschooling.com.
All right, everybody, welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. Right now, the futures are up 247, the S&P is up 38, and the Nasdaq is up 175. I'm sorry. That's pretty awesome, actually. All right, we talked about housing sentiment, and it's bad. Not going to look good. It's not going to be good, but it's not going to be terrible. It's just not going to be good. We talked about Disney losing their tax break, and now, that's right, somebody online said they're now going to have to get permits and be inspected. That's going to be fun. It's going to be real fun. We talked about Elon Musk's inflation report, and we talked about Amazon's delivery service. And, of course, coming up, we have today's picks and plays. But you guys got to hit that like button, and you got to hit that share button, or I'm not going to even tell you anything about it. Come on. Hit that like button, hit that share button, or I'm not going to go on. All right, I got to go on because I only have a few minutes. And, by the way, if you want to leave some comments on Facebook, Twitter, LinkedIn, and YouTube, and if you're listening on WWDB Radio, please set one of your presets to this station and listen every day at 7:30. All right, what's today going to bring? I think we're going to have a bit of a dead cat bounce on tech stocks. I mean, the market did great yesterday except for the tech stocks, so the tech stocks will probably bounce today. Netflix is toasted for a while the investors lick their wounds. The other tech stocks affected by the drop, like Meta, are concerning me, but I do have plays in them. We will also see, American Airlines is going to raise today. It's going to do great. And I just keep counting each $100,000 I would have made every point it goes up if I would have kept it longer. We have 140 companies reporting earnings today. 140, so it should be a wild ride day. Wait till 2 o'clock because you know what's going to happen then? We're going to have the Fed report. So it's going to be an interesting 2 o'clock. So 2 o'clock, watch the market drop fast. My guess is 50 basis points increase, and that's what the Fed's going to talk about. And that's going to be a doozy. By the way, I still like Apple into earnings, and I like Meta, but it kind of scares me. It's either going to pop big or drop big, just like Tesla did. It might even be a good spread play. All right, real quick, final look at the futures. 265, the Dow is up 265, the S&P is up 41, and the NASDAQ is up 185. The market's moving up fantastic. All right, the cryptos are also creeping up again, and it looks like the stock market and crypto market are kind of in sync for now. And that's unusual, though. Usually the crypto market is a tell for what's happening in the stock market. Well, if it's the case, we might have a great ending of the week, so tomorrow might actually end up really, really good, if that's true. All right, gold and silver, as expected, they're kind of reacting opposite to the market. That's pretty common. The investors are taking their money out of the safe plays and pouring them into the great earnings plays. So we have all these great earnings plays like, they all have the fear of missing out. I got to tell you, the fear of missing out is what makes Wall Street make bad decisions. I teach that in class. If you missed out, don't try to go get it. All right, the Treasury bond is below 2.8, 2.9 right now, and that's obviously not what's moving the market rates. All right, I want to thank you all. By the way, I think oil is actually down about 103 right now. I want to thank all the listeners on WWDB Radio in Philadelphia. I want to thank you for your continued support. My name is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. Hey, once again, look at that. He put up my name. Isn't that cool? I like it. All right. Once again, if you want to get it, if you don't have a chance, order my book. Go to go to BarnesandNoble.com. Look up Money Hacks by Larry Steinhouse. And also, from time to time, as you know, I own some of the options and assets discussed in the show, and the opinions discussed in the show are solely mine, and no one has asked me to discuss them. All right, I want you all to have a profitable day. We'll see you tomorrow.